Good morning, Southern California, AM 1220, KHTS shows Fred Arnold on the Southern California Business Spotlight. I'm joined by Patti Handy. Patti Handy is a mortgage professional with American Family Funding, also an author, three-time author.
Thank you.
3 books, right? Four? Oh, excuse me, 4. How to Be Richer Than Your Parents, love that one.
Money Rules 101. I wrote a children's book, and then Thriving After Divorce.
Right, yeah, yes. So Patti is certainly the one to go to when it comes to advice on money and challenges and thriving. Let's talk about abundance and creating abundance in your life of wealth. Did you know that the average homeowner net worth is over $110,000, but the average, the net worth of someone that owns a home, whether a rental or a house, but the average net worth of someone that does not is in the teens?
It's yeah.
Dramatically, just over $10,000. I mean, that is dramatic.
Yeah, real estate is a huge way to create
wealth.
Net worth, absolutely.
Yeah. So let's talk about building wealth, and you've done that for over a decade for your clients. What are some ways to do that?
Yeah. So let me premise this by saying when I talk about creating wealth, whether it is to clients or to speaking to youth, it's really financial freedom. It's creating a life of financial freedom that allows you to live the lifestyle that you want. Whether it's a life of, giving back and donating, traveling, whatever it is. It's not about acquiring material wealth. That's just something I'd like to share. But creating wealth, there's like a 3-prong approach. You have a bar stool, okay? And if you have one leg, you're going to fall over. If you have 2 legs, it's a little bit wobbly. A 3rd leg creates a little more stability.
So 4.
4 is even better. So the three legs are real estate.
Okay, real estate.
In the financial markets, so the stock market, and then creating a source of alternative income. So being an entrepreneur. So having multiple sources of income are, a great way to subsidize the W-2 income.
And now, so let's just talk about that, because some people, they're friends that are police officers, friends that are teachers, fantastic jobs, good benefits with their 401k and or their retirement.
Sure.
But they're only going to go so far with that unless they spend dramatically less than what they earn, and most don't.
Right.
So that other pillar is their real estate.
Right. And the beautiful thing about real estate, when you invest over time and when you set yourself up at retirement, the income is passive, it's residual, it's a beautiful thing. And if you've got a home that's paid for because you bought it 30 years ago or you've refinanced it down to a 15-year mortgage or whatnot, that's, again, just all positive because you've got taxes and insurance, but there's no mortgage. So that, again, is just nice, positive cash flow, and it's residual and passive, which are 2 beautiful words when you're retired, especially.
Well, typically when you buy a rental property, you're putting 25% down. And that's, some people are going to say, I just want to buy my first house. I don't have 25% down, but and let's say they're 25, 26, they're working their job for some time, or they finish college and they get a job, whatever that is. How do they build into 3 or 4 homes over a 4 or 5 year period or 10-year period? How can they strategize that?
Well, they start small. Start with a small little condo.
So one you're living in, right? So 3.5% down?
It could be your own, personal home. Go FHA, absolutely, 3.5% down. And then you just parlay that over time. The other good thing with investment properties, the interest rate is substantially better with 25% down, but you can technically get in with 15% down. You have the mortgage insurance, but if you don't have quite the 25%, you can actually get into an investment property. But start small. Do a little condo. Put the minimum down. And then, after it's appreciated, which it will over time, sell that, do a 1031 exchange, move up to a single-family home. Yep. And I've seen people do that, and then over time they have apartment buildings or commercial property or whatever it is. And
it's having the confidence to start.
Absolutely.
Doesn't it?
Yeah.
So let's break this down a little bit for somebody that's going, wow, that's overwhelming. So you buy a house, run a scenario by you. You buy a house, condo in Santa Clarita Valley for $375,000. 3.5% down is about 12.
Yeah.
About $12,000, yep.
Mm-hmm.
And your payment's going to be $2,500 a month, right? You can handle that. You can rent it. You can buy your next house 5% down, can't you, if you move into it?
Right. And the beautiful thing is that this tenant is paying your mortgage.
Yep.
So
Yep. And your rent, and that tenants, you can raise the rents over years, can't you?
Right. Plus you have a tax advantage.
Right.
You get to
Plus, if you have a 30-year loan, does the payment ever go up?
Nope.
No.
you're locked into a 30-year fix.
Yeah, so your
Yep.
your costs are staying fixed, but your
rents
rent
can
can
go up.
continue to go up. Now, what do you say? Somebody will say, "Well, it's a hassle renting your home." So somebody's going to say that.
Yeah, there are different tolerances. People have different risk tolerances and personality tolerances. If you just absolutely do not want to hassle with it, hire a property manager.
Right.
Let them deal with the calls that come in and the maintenance, and they'll just call you and say, we've got this issue, and you say, fine, deal with it.
Yeah.
And you don't mess with it.
One of the things that I also found, Patty, that people don't think about is if your payment's $2,200 a month and your rent is $2,500 a month, you're making $250 a month, right? Well, let's say you got to put that aside just in case you have losses, but you're paying down principal every month of how much sometimes?
Yeah, well, your client's paying down the principal.
Yeah, that's
Or
true.
Your tenants.
That's true.
Yeah.
And so that's building your wealth, isn't it?
Right, yeah. Your tenant's paying your mortgage, and
And the balance is going down.
you're getting the tax advantage, not them.
Yeah.
So that's all a beautiful thing.
And then let's talk about the other thing, the appreciation of homes.
Right, right. We've all seen the mortgage or the real estate market ebb and flow. It goes through its cycles, but over time, like the stock market,
Yeah.
it always comes back.
Yeah.
And if you're looking at trying to time the market, I would say don't. Don't, there are those that flip houses and there are those that do day trading in the stock market.
Right.
I'm kind of the mindset of like a Warren Buffett. You buy and hold and you
Yeah.
think long term.
Yeah.
So don't try to time it.
Yeah.
But over time, the stock market and the real estate market have done very well,
Yeah.
and they appreciate.
Absolutely.
And that appreciation is just free money.
Yeah, absolutely. And
Yeah.
the money's the interest rate versus living in a house versus a rental is very minimal, right?
Yeah, and we can run those figures with our clients. So if you have a particular scenario that you want to run by us, give us a call, and we'll show you the differences of rent versus own, and do those calculations. And more times than not, you're very surprised.
So the three main ways to build wealth.
Real estate, stock market, and having a little side business.
Yep. And if you ever have aspirations, let me just tell you, to write a book or to do something different, extraordinary, call Patty. Because
Thank
Patty has done it. She's lived an extraordinary life. She's doing amazing things. She's
Thank you.
helping a lot of people after they go through a divorce to live a more extraordinary life, show them how to arrange their finances. So I'm
Yeah.
bragging about Patty a little bit because
Thank
she's
you.
an amazing lady.
Thank you.
Yeah.
Appreciate
Those
that.
who want to reach out to you, your number.
Direct number at the office is 661-505-4310.
Right? Author, mortgage professional, mom, and just a great, great entrepreneur, Patty Handy. Well, I hope you
Thank you.
enjoyed this edition of the Southern California Business Spotlight. I'm your host, Fred Arnold on KHTS.